Hey yo, what is going on and what is up with the Chico army and any new soul who I like to call a viewer of the tube? My name is Tyler, the host of the crypto channel that looks like a hippie but blows you away with the talent, kind of like this group of beach bums. So I made a big mistake, try to see it once my way. You know our Alice in Chains. It's time for Chico Crypto. Well, would you look at that? Bitcoin goes down once again, but looking back at the charts, we can see that 9K level is a tough support level. Something or someone is not letting it drop further. I wonder what it could be. Could it be those stonky stonks? Well, pulling out the Dow Jones over the same time period, it reeks of strong correlation, pretty much following each other to a T-dip pump or whatever you want to call it. Now, keeping only the Dow chart up, we can see the liquidity pumps each and every time to save the markets this week. 3 times there was a spike. And this was when the markets looked bleak, like they were going down or when they started trading sideways. I wonder who could be doing this? Well, we know it's BlackRock doing that funny business they were hired to do by our current administration, save the stock market at all costs. Which means I don't believe crypto will be going down anytime soon. Like I've been saying, let's enjoy this summer of market euphoria while it lasts, because come fall, things are going to get ugly and ugly quick in my personal opinion. But we'll talk about that the closer it comes. The 4th of July is coming and Stonk's gotta be red hot for that. Fireworks, you know what I mean? It's America's Day come this weekend. And do you think for 1 second they would let a significant collapse happen then, or even for the markets to look bearish? No way in hell. So short term and midterm, to me the markets look great for crypto, and I'm eyeing an opportunity of which I touched on 2 days ago with Centrifuge and their 10-lake product, which takes invoices and mints them as NFTs, and companies from their invoices can access liquidity from investment pools by individual DeFi users, as long as they provide a return to the investors, which come in the form of token shares in the pools. So the tokenization of assets in the real world like invoices and the digital world like investment shares drop in 10 in Centrifuge's example is going to be a big wave coming. And guess what? You don't have to look far to see the big wave is coming. Tokenization is on the top of tech powerhouses' minds, like Microsoft. They published this paper, Tokenization, Establishing Digital Representations of Value as the Medium of Exchange, in October of last year. And in it they say, however, hidden in plain sight, at the core of one of the most hyped and misunderstood technologies, blockchain, lies an immensely powerful concept that will forever change the way transactions between parties execute. And that is tokenization. They specifically mention non-fungible tokens in the report, and then they mention their token taxonomy framework, the TTF, of which I have covered before, but from a blog post about the framework release from Microsoft. It says, the initiative brings together some of the most important blockchain platforms from the Ethereum ecosystem, Hyperledger, and IBM Intel R3 and digital asset. Out of all the blockchains, they mention Ethereum and its ecosystem first. I wonder why. Because that is what they're choosing to build the TTF tools on first, and then the other blockchains. For example, the GitHub for it, which as we can see the overview was updated in May of this year. Going down to the section on tooling and taxonomy, it says, other GitHub repositories can link to the taxonomy repository to link implementation-specific code to specific taxonomy symbols, like a behavior or token specification. This code is then mapped as a platform-specific implementation of that artifact. For example, in the Ethereum community, OpenZeppelin, there is a popular open source repository for Solidity source code that developers use and is mapped to the several artifacts in the TTF. So why is this important? Well, a non-crypto news outlet in the payments industry explained it well from a Payments Journal article titled Lookout Payment Providers, a standard that is born for defining a token's properties and behaviors. The article says, card payment networks have implemented proprietary tokens that establish a unique mapping between card numbers, card accounts, and the network-issued token that resides in a digital device. More recently, both MasterCard and Visa have announced that they intend to use a new tokenization process that will enable direct access to bank accounts that have no card associated with them. These private tokenization efforts will now compete with a new open standard for designing and implementing tokens created by the Enterprise Ethereum Alliance, that is the TTF. Yes, my friends, I'm talking this is what allows crypto to go mainstream, where a token, whether it be Ethereum, an ERC20, a stablecoin, an NFT, loyalty points, and more, could be accepted for payment at your local stores soon. So why didn't I talk about other blockchains and their tokens? Well, the article goes on to say, while the press release touts that the token taxonomy framework is independent and is operational on any technology, including blockchains or databases, it appears that the GitHub repository leans toward the Ethereum environment. For example, the article goes on to identify a Santander implementation of a TTF token that is tied to an Ethereum smart contract, which restricts access to entities who pass the Know Your Customer regulatory process. You need more confirmation that they're going with Ethereum? Let's just go to Microsoft Azure's blockchain tokens, which as we can see, developers can easily define and create token taxonomy framework compliant tokens that represent digital or physical assets. Then let's go a bit deeper and look into Azure blockchain documentation, and then scroll down to development tools and samples. And looky there, Azure blockchain development kit for Ethereum, and then an Ethereum blockchain connector, as well as GitHub code samples. So the signs, they are all there on the surface level, but what exactly has Microsoft the company built themselves? Well, NFTs based on the Ethereum ERC 1155 standard. And I'm sure you're like, wait, Tyler, who created that token standard? I know Microsoft didn't. Well, it was a blockchain company, and it was Enjin, and it happened in December of last year. From the blog post about the NFT reward badges they created, it was a collaborative pilot program between Microsoft Western Europe and Enjin. Azure Heroes rewards developers with blockchain-based digital badges, styled as badgers, for various achievements, verifiable acts of impact, and meaningful contributions in the developer community. And there was even a custom blockchain explorer for the NFT badges, created with Enjin X, and Microsoft's logo plastered right there. And then going to the transaction section, we can see that yes, the badges are being earned by the public to Ethereum addresses, and they are being transferred back and forth. The pilot program is working. So personally, I see the opportunity for NFTs as it's a brand new arena. The end of 2017 can be considered the beginning of the NFT era. So basically it's just over a couple years old. Then going to nonfungible.com, which began tracking NFT sales volume, they have almost $100 million USD tracked and traded for digital representations since they began tracking. So I'm sure some of you are like, 100 million since the beginning? It's not that great. Crypto exchanges do that in a day in just Bitcoin trading. Well, again, this is a new concept. I'm sure for some of you even. Remember, NFTs have only been around 2.5 years compared with Bitcoin's over 10 years. So Chico's opinion, DeFi, token standards, fungible tokens, and NFTs are going to rock this world one industry at a time. Cheers, viewers. I'll see you next time.